Hi there, Save with Crypto here. Okay, so today I've got another question from Meghan Markle actually, so let's have a listen to what she's got to say.
Hi, savewith Crypto, Meghan Markle here. I was just wondering if you could explain the difference between Bitcoin USD, Bitcoin USDC, Bitcoin Perpetual, or any of the others. That would be very good. Thank you.
Okay, thank you, Meghan, for that question. Right, okay, let's do this. Now, what Meghan is referring to there, I believe, is the different kinds of trading that you can do on ByBit. And if you haven't got a ByBit account, get one because I think it's the best exchange out there. I have tried others. I mean, the guy from BitGet was trying to get me to send people to BitGet, in return for quite a nice commission. And I tried it and I just didn't get on with it, to be honest. I believe it's a really good exchange, but I just love ByBit. I think it's superb. I've never had a problem with it. If you need support, you can come down here and get support really quickly. And the best thing is you can get up to a $30,000 bonus when you sign up, and make a deposit. You obviously have to make a big deposit to get $30,000, but you can get other bonuses on the way up. I think when I opened mine, I got like $500. But that was a long time ago. So Meghan mentioned USDT and USDC. They are stable coins, right? So you need to understand what a stable coin is. And the best way to find out what a stable coin is to watch this video here by Whiteboard Crypto. And I'll put a link to that in the corner right now. But basically a stable coin such as USDC and USDT is a crypto that is pegged to the price of a fiat currency. In those cases, that is $1. So more or less 1 USD dollar equals pretty much 1 USDT. And that is also equal to pretty much 1 USDC. Now, they don't always stay at 1. Sometimes they do vary a little bit. And every time they do, it causes mass concern. Which might be why some people are a little bit wary about things. But yeah, do watch this video just to find out more about stablecoins, because there are two different kinds as well. There's those that are backed by physical money, such as USDT, USDC, and then there's ones that are algorithmic stablecoins, and that was things like the ill-fated UST that went to zero last year, pretty much. So do make sure you understand what a stable coin is. So the different types of trades, let's have a look at those. So when you come over to ByBit, you've got these different kinds of trading you can do. Now, first of all, I'm just going to show you how the assets work here. Okay, so if you look at the overview of the assets, you can see here that I've got some stuff in the funding account, some in the spot, some in derivatives, and somehow I've got 55 cents in the USDC derivatives, which is strange because I never use that. Now, if you've got a unified account, this will look slightly different. I have got one I can show you. It's not verified, so I can't use it. Now, when I did my poll the other week, it seems that most of my viewers don't have a unified account, and I don't either. But basically what you have there, you've got your funding, unified trading account, and inverse derivatives. So unified trading, that's where you can use various cryptos for spot trading, USDT Perpetual, USDC Perpetual, and USDC option. I won't comment much more about that because I don't really totally understand how unified accounts work. So let's go back to mine. Now, the only thing I ever do is I usually put crypto in here or I take crypto out. I don't think I've ever used fiat money, but if you want to do that, you can go to buy crypto, and there's various ways you can do it. And when you buy things, they will appear, I think, in the funding account. So, for example, I've got some Bitcoin there, some USDT, and that's about it, really. And if you want to move these about, so for example, I want to move the Bitcoin there to the spot account, I can just go like transfer from funding to spot, say, and that will move it into the spot account. Now, the spot account is used for trading when you're essentially buying and selling coins with different coins. Say, for example, if I wanted to buy eGold, I could trade eGold USDT. That's the only options I've got there. Something like XRP, I might have a few more options. And there I've got XRP USDT, XRP USDC, and XRP BTC. So what happens here is if, say, I wanted to buy XRP, I could just do a limit or a market order, say buy, and that would set up a limit order to buy, and that actually just bought some XRP. So at the moment I've got XRP in my spot account. Okay, so if I want to move that to somewhere else, say for example I want to do some derivatives trading with it, I can then move that XRP from the spot to derivatives. Okay, so that's all the spot account does. That kind of just literally buys and sells different coins in different pairs. Now with derivatives trading, what you're doing there, you're trading the volatility. This is where one of the differences comes in. So for example, in USDT Perpetual, you've got all these pairs: BTC, USDT, Ethereum USDT, etc. And your underlying asset that you're holding is USDT. When you go into a trade, you'll be trading derivatives contracts, which are generally measured in the underlying asset. So that will be measured in USDT. And then when you close the trade, you'll be left holding USDT. This is quite cool because it means if you've got USDT, you can trade all these altcoins. So for example, say I wanted to do a trade with BNB USDT, I can trade the volatility of the price of BNB without actually buying any BNB. You don't need to buy BNB to do derivatives trading. You can just use USDT. Now, in some circumstances, you might actually want your underlying asset to not be a stablecoin. In fact, I prefer that. So I use inverse contracts. Okay, so here you've got inverse perpetual contracts, right? Now, perpetual means that you go into a trade and it can stay open as long as you like. Futures I've never used, but with futures what you're doing is kind of betting on the future price of a coin, if you like. I don't fully understand what futures are, but I've never used them, so I only ever use inverse perpetual. So the one I use most is Bitcoin USD. That means that I start off holding Bitcoin, so I've got one Bitcoin. The price increases 10%. On 1x leverage, I would have 1.1 Bitcoin. And if I close that trade, I'm then left holding 1.1 Bitcoin. So my amount of Bitcoin has gone up by 10%. If I do that on 10x leverage and the price of Bitcoin goes up 10%, that means that my amount of BTC, amount of contracts in the trade has gone up by 100%. So in fact, that doubles your money. So a 10% increase on 10x leverage gives a 100% increase, therefore doubles your money. And if I came out of that trade, that would mean that I'd be holding 2 Bitcoin. Okay, let's go and have a look at some real examples, because I've got some trades open at the moment. Not sure how they're doing. Okay, so this Bitcoin one here, this is on 20x leverage. So I'm using here $532. So on 20x leverage, that is as if I'm trading with $10,505 or 0.345 Bitcoin. Okay. Now, if I was to come out of this trade, I would be left holding Bitcoin. Okay. Now, this one here, BTC USDT, this is a USDT perpetual, and in fact, it actually shows you here that 687.188 USDT equals approximately 687.18 USD. So when I close this trade, I will be left holding USDT. This one here, Ethereum USD, this is a inverse perpetual trade. So in this case, I had some Ethereum and I'm trading that against itself. So the underlying asset is Ethereum. It's just that it's measured in USD, that's all. So once again, when I close this trade, if I was to close that now, I would have 6.2% more Ethereum than when I started, and I would be left holding Ethereum. In the same way, some XRP here. I started off holding XRP. I'm in a leverage trade, actually underwater at the moment, but if I was to close that now, I would have 10% less XRP, so I'm not going to. Now, these have their advantages and disadvantages, To me, I think it makes sense to trade Bitcoin USD, so you're trading Bitcoin against itself, when you believe that the price of the asset you're holding is going to go up. And at the moment, I think, Bitcoin bottomed out a few months ago and it's on its way up to 100k and more. So I believe that Bitcoin will go up in value. So if, for example, I missed a trade here, then I wouldn't worry because I'm holding the underlying asset anyway, so that's all good. If I was holding USDT and I missed a trade and Bitcoin, increased, let's say doubled in value, I'd be mightily pissed off really, because I'd just be left holding dollars, which are never going to go up in value. They will only go down in value over time. So for that reason, USDT is probably better to trade when you believe the market is going down. So ideally you would have started doing that at the end of 2021, and you could have ridden that all the way down doing shorts, or you could have done the occasional little long and then a short, and then you would be left holding USDT, and then you could have just bought tons of Bitcoin when it was 15k last November. So that's when you could use USDT. But to me, USDT, that is most useful when you want to trade altcoins. So let's say, for example, that I wanted to trade some Moonbeam, which I believe is GLMR. You can trade that doing spot. I don't want to do that because I don't want to own any. I have no interest in owning any. I don't think I'll ever use it, but I'm interested in trading the volatility because it's down a bit right now. So I would go for USDT Perpetual. So you give that a click, and then that shows you the chart. Okay, and it would have been nice to catch that wick there, but I'm just going to do a market buy here, 3x leverage. That's perfect for that kind of thing. And I'm going to do a buy just to show you what's going on. So you see now I'm in a Moonbeam USDT trade, and when I close that I'll be left holding USDT, and I don't have to buy any Moonbeam. Now that's where I think it's useful to have some USDT, even if you think the price is going to go up of the crypto that you're trading. Anyway, I hope that clears things up a little bit for you. If you've got any more questions, then put them in the comments down below. The Bitcoin trading for me has been going great recently. You can see here my, profit and loss. The last 14 trades have all been in profit, and today was one where it kind of hit a trailing stop loss, which, by the way, will probably be the next video, or maybe the one after that. Will be about trading the stop losses, and that one, this morning came out at 19%, which was actually worth 0.0253 Bitcoin, which in dollars would be $773. So that's quite a nice day today, really. I've been at this stage before where I've been sort of, even only playing with like a few $1,000s, earning sort of, between sort of $5,000 and $10,000 a month. It's quite feasible. You have to kind of have a bit of balls to do it, and also you need to make sure that money isn't money that you need, like you need it to pay the rent or to pay a mortgage, because just in case things go wrong, really. But if you've got something like a few thousand to play with, it's quite easy to make I don't know, $100 a day is super easy, really. That's what I intend to do. I find the trading Bitcoin probably the most lucrative thing that I do, and the best use of my time. However, the thing I like doing best with my time is making these YouTube videos. So if you like the idea of that, please give the video a like. Make sure you're subscribed, leave a nice comment, and above all, tell your friends.